The Roth IRA is one of the greatest wealth building tools of all time, but most people never open or invest in one because it either sounds confusing or it looks intimidating. I get it. When I first opened mine over 10 years ago, I had no idea what I was doing and thought, shit, the IRS is going to come after me because I clicked a bunch of wrong buttons. So in this video, I'll show you exactly how a Roth IRA works, how to open one, and how to automate the whole thing step by step. Let's start with something you already know. A savings account. It's where you stash your money for short-term stuff like an emergency fund, a future car down payment, or even maybe the battle pass for your favorite game. I say that because I just bought the new Marvel Rivals battle pass. It's pretty nice. The point is, the money is safe, easy to access, and earns some interest, which you also pay taxes on. The problem is that savings accounts aren't ideal for long-term goals like retirement, mainly because inflation quietly makes your money worth less each year. So quite literally, you are losing money in your savings account. That's why we need something more OP, something that helps your money grow over decades. That's where the Roth IRA comes in. Think of it like a buffed up version of a savings account, but with investing and tax benefits built in. So instead of your money sitting there collecting dust, it goes to work, earning money on top of money, thanks to something called compound growth. But there's one more twist. Normally when you earn money, whether it's from a job or a side hustle, investments, or interest earned from your savings account, the IRS wants a cut. That's called taxes. The Roth IRA solves this problem. You take money that's already been taxed, your paycheck for example, deposit it into your Roth IRA, invest the money, and it grows tax-free. Then when you retire, you can take the money out, even if it's millions of dollars in profit, without paying a single penny in taxes. For example, if you invest $500 a month in your Roth IRA for 30 years, and the investment within your account grows at a 7% average return, you'd end up with around $600,000. Of that, only $180,000 is your own money. The other $420,000, great number, is pure growth. And the best part, you get to keep all of it. No taxes owed. In any other account, you'd owe tens of thousands of dollars in taxes on that growth. But with the Roth IRA, it's yours, tax-free. Now, most beginners get this one thing confused. The Roth IRA is not the investment itself. It's simply a bucket that holds your investments like mutual funds and ETFs, which we'll talk about later. One more thing people get confused about is, unlike a 401k, a Roth IRA is not tied to your job or employer. You open it yourself online for free, and it takes just a few minutes. And don't worry, you'll learn how to do it in just a bit. This also means you can keep using your Roth IRA even if you switch jobs, go freelance, or take a break from work. So, tax-free growth, total control, and long-term wealth. This is what makes the Roth IRA super OP. But here's the catch. There are some hidden rules around withdrawals, income, and even a 5-year timer that most people don't find out about until it's too late. Miss just one, and you could owe a surprise tax or get hit with a penalty. So let's break that down. First, the good news, and this is yet another reason why the Roth IRA is such a badass account. You can always withdraw your contributions at any time, tax-free and penalty-free. So if you put in $5,000 and your account grew to $7,000, you could take out the original $5,000 without any penalties. You can't even do this with a Roth 401k because you'll pay a 10% penalty and potentially taxes. This makes the Roth IRA way more flexible than people think, especially for emergencies. But here's where people get tripped up. Your gains, the money your investments earn, also known as the profits or earnings, are treated differently. If you withdraw those gains before age 59 and a half, you could get hit with taxes and a 10% penalty, which is why a high yield savings account is still critical to have so you can pull money from there instead. But if you absolutely need to withdraw some of your gains, there are exceptions to this early withdrawal penalty. For example, a first-time home purchase up to $10,000 there, qualified education expenses, birth or adoption expenses, and disability or certain medical emergencies. Now, while I highly discourage making any kind of withdrawal from your Roth IRA, the flexibility is there in case life throws a curveball. Overall though, it's best to keep cash in your high yield savings so you can avoid this altogether. Now here's one rule that almost no one talks about, the 5-year rule. Even if you're past retirement age, you have to wait 5 years after your first contribution before you can withdraw earnings tax-free. So for example, if you start a Roth IRA at 59 and you retire at 62, you still might owe taxes on your gains if you didn't meet the 5-year rule. That's why it's smart to open your Roth as early as possible, even if you're just contributing a small amount. Next, not everyone can contribute directly to a Roth IRA. If you make too much money, the IRS limits your eligibility. For 2025, the income thresholds are based on something called MAGI, your Modified Adjusted Gross Income, which always reminds me of the anime Magi. Have you guys seen that? Let me know in the comments. Anyway, MAGI is just your pre-tax income after certain deductions like student loan interest or retirement contributions. You don't need to calculate it by hand. Most tax software or your accountant will tell you exactly what your MAGI is. Now here's how the limits actually work. If you're below the income limit, you can contribute the full amount, up to $7,000 or $8,000 if you're 50 years or older. If you're in the phase out range, you can only contribute a portion, not the full amount. And if you're above the limit, you can't contribute directly at all. You can think of the phase out like a level cap in a video game. Once your income starts creeping into a certain range, the game starts to limit how much XP, in this case, contribution room, you can earn. And once you pass a certain level, no more XP. Anyway, here are the 2025 numbers. Single filers can contribute the full amount if they make under $150,000, partial contributions between $150 and $165, and zero if you make over $165,000. If you're married filing jointly, those numbers are $236,000 for full contributions, between $236 and $246 for phase out, and zero for anything over $246,000. But don't worry, if you're above those limits, you can still use a workaround called a backdoor Roth IRA, which we'll cover in another video. Leave a one of those flexing emojis in the comments if that's you, and maybe I'll prioritize that video. Now it is time for my favorite part. Let me walk you through exactly how to open and fund your Roth IRA step by step. So the very first thing we need to do is choose a Roth IRA provider, or as they say, broker. Now think of your bank account. You have a checking and savings, and it's all managed by the bank. So same situation here. We need a broker to allow us to open a Roth IRA, and they're going to manage that account for us, as well as the investments that go inside of it. Now there are endless options, of course, which is good and bad. Bad if you have analysis paralysis, but let me help you sort of narrow this down. I have tried Robinhood, SoFi, Wealthfront, Public, Fidelity, Vanguard, and they're all pretty good. The trade-offs, I would say, is going to be the accounts they offer, investments they offer, and then user interface. Now, while the most popular ones are going to be Vanguard, Fidelity, and Charles Schwab, the reason why I would avoid them as beginners is because they are highly complex. The user interface, it's got a lot going on, and what I find is beginners often are intimidated, and as a result, they delay investing, and we don't want that. I want you to start immediately because time's your best friend. So while I used to use companies like Fidelity and Vanguard, I have since transferred my investments to SoFi, which is where I have my bank account. So for this tutorial, I am going to use SoFi. This is not sponsored in any way by them. I do have an affiliate partnership with them, but it is only for the bank account portion. So clicking the link in the description or comment section below will take you to this page. We want to click Invest Now, then click New to SoFi, Sign Up, and go ahead and enter in all of your information. They're going to ask for all the basic stuff you'd expect: name, address, phone number, social, date of birth. All this is standard. Now, once your account is created and you're logged in, head over to the Invest tab. You won't have much going on here, but go ahead and click New Account on the top right here. Under Retirement, we want to select Self-Directed IRAs, and then we want to choose Roth IRA. They do have other options here if you're self-employed, SEP IRA if you want that, traditional IRA. If your situation calls for it, go for it. But for this video, we're talking about the Roth IRA. So select that. Now for this part, they're going to ask you for some additional information. Fortunately, you already filled out all your basic information when you created the account, so this will be pre-populated, but they'll ask you some additional questions on top of that. For example, they're going to ask if you or a family member is affiliated with any government entities surrounding the stock market. And if you're not, just select none of the statements apply below and click Next. You can add a trusted contact if you'd like, otherwise hit I'll do this later. And of course, go through the terms and conditions here. There's an option to earn interest on the uninvested cash in your brokerage account. If you want to do that, cool. Same with share lending. If you want to lend your shares to other investors and earn a certain percentage, you can do that too. Otherwise, deselect it and click Agree and Submit. Now, once you're done with that, it'll bring you back to this page. If not, click the Invest tab again, and you should have a new Roth IRA set up here. Now, for that previous part, I was using a family member's account because they didn't have a Roth IRA set up, so I can show you the whole process. But now that I'm logged into my account, you should have your Roth IRA. I'm going to click that here. Now, you won't have anything here. It should say zero, but once you have money invested, you'll have a total here, charts, all this good stuff. And from here, we can start investing. So up here in the search bar, I can search for one of the investments that I invest in. This is Vanguard's S&P 500 ETF, which gives me exposure to the largest 500 companies here in the US. We're talking about Microsoft, Nvidia, Apple, Amazon, Meta, etc. So instead of going all in on one or two companies, we sprinkle our money across hundreds, even thousands of them, potentially around the world. Now, I'm not going to deep dive on all the different investments in this video, but at the end of this video, I'll link a separate one that'll deep dive on index funds, when to invest, how much to invest, etc. So stick around for that. But for now, let me just show you how to make your first investment. So let's say you want to go with this fund. We'll click buy and you'll choose the account you want to invest in, your Roth IRA. Now, since I don't have enough money in my Roth IRA right now, we can add money here. And if you go down here to from, this is where we can manage our bank accounts. Since I also bank with SoFi, my accounts will just show up here. But for you, click connect a new bank account. Then down here, choose view other transfer options, connect bank, click next, agree. Then we can use played here to connect your bank account. Then once your bank account is connected, we can go back to this buy page here, enter in how much you want to invest, ensure you chose your Roth IRA, and you can place the order here. And just like that, you made your first Roth IRA investment. Now remember, the Roth IRA is the container and the investment sits inside of that container. For example, this S&P 500 ETF. Now to take it a step further, we want to set up a recurring purchase. If you don't have enough money to max out the Roth IRA right now, which is $7,000, you can hit recurring purchases here. You can choose an interval. You can choose every week, 2 weeks, every month, and then you choose the amount here. Click next. You can choose a custom amount if you'd like. For example, $583, which should add up to about $7,000 after 12 months. You would choose your payment method here, which is your newly connected bank. This buying power option here just means that if you already deposited cash into the Roth IRA but haven't invested it, this toggle button will use that money for this investment as opposed to the bank. If you don't have that, it'll just draw from the bank account. Verify everything else, hit confirm, and you're done. All right, now you know how to open a Roth IRA, but when should you invest? How much should you invest? What should you invest in? And how do you avoid losing money? We got you covered with all these questions in this video, and be sure to like and subscribe to learn how to be a rich nerd.